Welcome everybody to another quick hit review video. It is Sunday evening, it is the 16th of June 2019. The market's open in a couple of hours and I've already done a review and I have 9 potential opportunities on the watch list. Just before we dig into the charts though, Monday we do have an ECB press conference that's out at 6 o'clock in the evening GMT time. Other than that, there are no major news events for me to pay attention to. Even the press conference, I'm not expecting a large reaction from it. So here we are then on the Aussie dollar CAD on the dailies, and I have here a potential trend continuation and back pattern. But as usual, we want to do our due diligence and we're going to do our higher time frame analysis all the way down to our lowest trading time frame. So we have a swing in the market just up here. We have a fairly directional move, a pullback, and then another fairly directional move down to this point. And if I highlight the wicks just down here, you can see that we have not violated them, though we have spiked through them. If we zoom out and get a little bit of perspective, I am expecting price to come down to this lower structure level. And if I put a structure level on here, we are currently trading at this internal level of structure. But the way this is setting up, I am expecting a move lower, though there is no confirmation of it here on the daily time frame. If we do get a move lower though, we can expect a move of around 77 pips. Let's drop down to the 240. Now here on the 240, I'm just going to clear this up. We've got a move lower, a pullback, then a move lower. Now what we've technically done here is double bottomed. And even though this is not a valid double bottom for me, this is a retest on the 240 time frame. I cannot take a trend continuation trade here because this did not make a new low. So technically this is a retest. And so on this time frame, I cannot take a trend continuation trade, even though we have just violated this level of structure. However, if we go down to the 60, we may see a different story. Yes, we do. Here on the 60, we have not come down to retest. Actually, one second, let me double check. Okay, here on the 60, we have come down to retest the closes of the candles. So again, for me, this has come down to where I would have taken profits and I cannot look for trend continuation at this point. But what we can do is we do have a potential back pattern setting up. So we have an X leg up here, a nice swing in the market. We have X to A to B, hit to 50%, B to C, CD completion up here at the 886 for a back pattern. But what I'll be waiting for then really is on Tuesday is to see if we do actually violate that level, and I'll then be looking for a continuation to the downside. So not too much on the Aussie dollar CAD right now. If we go to the Aussie dollar on the dailies, it's a similar story, waiting for a violation. Very similar setup actually. We've got a swing in the market, a directional move lower, a move higher, and then a fairly directional move lower. And if I put a structure level on just here, we are actually now down at our structure level just here. So this is a decision point. Are we going to see a move higher or a move lower? Personally, I think that we're going to violate this level because just like the Aussie dollar CAD, we've come into a 382, and just this type of fairly directional movement is usually an indication we're going to continue lower, particularly with us hitting that 382 fib. Do pay attention though to this big wick. This is lots and lots of buying pressure at this zone. Now if we do drop down to the 240, we've got confirmation that we could still be going lower at this point. So I'm going to put a structure level on at the very lows of this lovely triple bottom. And if we look at what happened here, we have got a confirmed break below, close below, a confirmed violation. This is an indication that we could be coming lower. And I particularly like this setup because when we see 3 tests like this, 3 recent tests, this is classed as major structure for me. And when we violate it, we have a lovely opportunity. So for instance, we have violated it now, but if we were to come a little lower, You can see the RSI is oversold. We could see a small pullback. Where would we see that pullback to? Well, we could see that pullback to within the wicks. So this gives us a very narrow kill zone here where we can look for a rotation pattern. We can look for something like a double top or a head and shoulders, and it will allow us to get very tight stops across here, retest of the lows, and maybe play for an extension as well. Let's drop down to the 60. Nothing here on the 60. Let's go and take a look at the Euro Yen. I've got a counter trend and a trend continuation move. So here on the daily we had a move lower, a pullback, a move lower, a pullback. So this was our outside return here. We came into the outside return, and right here we had a lower low, lower close. So if you've gone through the course material, the educational material for trend continuation, you know this is a second chance entry. For me personally, I didn't get involved because the reward to risk was not in my favor. However, we have put in multiple lower low, lower close candles, and I am expecting price to come down and retest as a minimum this area. So if we drop down to the 240, we can start looking for other opportunities. Now, last week I did talk about this opportunity, which was an AB equals CD pattern. We actually went a little bit further beyond than I would have liked for the AB equals CD pattern, but you can see that we got the rotation, and we are actually coming in now to within the wicks of this internal structure level. And just check out the RSI here. We're down at around 7 on the RSI. If we come into this level, we can look for a little counter trend move, maybe a double bottom or a head and shoulders. If we go to the 60, not a great deal here on the 60. If we look at the RSI, we are oversold here at 9.5 on the RSI, but again we've not come into the wicks, and the wicks is where we want to look for those rotation patterns. If anything, I'd say this is setting up for a continuation. Move lower, outside return, move lower, outside return, move lower, outside return, trending very nicely. A big move lower. We are at the moment seeing sideways movements, which is a sign of a breakout pattern. Here on the 15, I don't have much, to be honest with you, so this is a case of just waiting if we can come down into that internal structure level, see if we can get a little counter trend move here for a few pips. If not, I am expecting price to come down and retest these lows. Let's go and take a look at the Euro Aussie on the dailies. We have this is probably the best trade out of the 9 opportunities that I've got in terms of structure trades. Been talking about this for a long time, about us coming up to this major level of structure just up here. 1, 2, 3, 4, 5. You can class that as potentially 6. We've come into that structure level, which just so happens to be the 16300 psychological number. And we have tweezer tops, and look at what we've just done. We've put in a beautiful doji right here. Let me move this out of the way. Almost a tombstone doji, lots and lots of selling pressure. Clear sign here that there's a battle going on. We're seeing rejection. Not only that, we've got the RSI that's gone overbought at 83, massively overbought here. So I would expect, since we've held structure and we've got that candlestick formation, we've got the RSI and the 16300 psychological number, that we could see a move back down to retest this level, the close of the candles. Okay, if we can do that, there is around 70 pips worth of profit up for grabs. Now if we go to the 240, we're going to have to reposition our structure levels here. So on the closes of the candles, we have this level just here, and a little bit further up we have the closes of the candles there as well. Just let me make sure I get this right. Yep, that's good there. Okay, we can ignore this top one because we've come into this. This is the more major level of structure just here, and right at this point we have actually held this structure level. Let me reposition that just to show you that we have held that level. So the very highs are at the top of the wick just there, and if we look, we have come into that zone, we've double topped, we've got the RSI confirmation. So on the first test we went overbought, we have divergence on the second test. So right now we have an at market double top. However, I'm not going to be entering in this double top because I believe we're going to set up a head and shoulders, and it's going to offer me a better entry with a better reward to risk, and it's going to increase the probability, and I'm going to explain why that is. Just let me go back to the dailies. Let me put back on that structure level as to where I think price can come to, and that is the closes of the candles just there. Let's go back to the 240 and just look how price has moved. We have first of all had a move higher. We've seen a retracement. We've had a move higher, then a retracement, then a move higher, giving us a valid double top. We held structure. If we can get a move lower and a confirmed violation below this V point, again, go back and look at the educational material. When we look at confirmed double tops, this will give us a confirmed double top. We then wait for a pullback, and we're going to use another strategy called a 2618, and again this is in all the course material. And what we do is we look at selling the 61.8 fib. When it's a head and shoulders, we sell it aggressively, so this will be our entry. Stops will just be, I'm actually, well, the ATR here is 32, but I'm not going to go an ATR above the high here because the head and shoulders is the pattern, so I'm only going to be around 13 pips above the high there. If it was a double top by itself, I'd be a full ATR above the high, but since this is setting up as a head and shoulders, we do not violate the double top. We don't even come back up for a retest. So I'm now looking for a move lower. So the reward on this trade will be something like this, giving us a very positive reward to risk. So the risk, we're looking at about 41 pips. It's a fairly decent sized trade, looking for a reward there of around 90. So I'm going to be waiting for this to play out. Hopefully Monday or maybe even Tuesday we might have this play out and provide us with an entry. Let's go and take a look at the euro dollar. We have an at market cipher pattern. Let's go ahead and take a look at the dailies first of all. We're bearish here on the dailies. Overall we're bearish. However, if you remember, we did project a move higher from this level after this triple retest. And what we did with that triple retest, we moved higher and we actually violated this level of structure right here. So on the dailies, this is indicating due to this violation that we could go higher. However, we did only just violate, but if we were to come higher, I would expect price to come to this level. But right now we are putting in lower low, lower close candles. Let's go and take a look at the 240. Here on the 240 we have, yeah, okay. Here on the 240, I'm actually going to drop to the 60 because there's nothing on the 240. Here on the 60, we have an at market cipher pattern using this as the X leg. And we have X to A to B, B to C. And a CD completion was here at the 786. But if I put a structure level on down at the X leg, you can see we are almost down at that level now, and pay close attention to this 112 psychological number. Also check out the RSI, we are already oversold. If we can come down to this 112 area, well, first of all, you have an at market entry for this cipher pattern. All the rules are in the educational material. However, if you want to wait for a conservative entry, drop down to the 15 and look for a double bottom. We may not get a double bottom. Actually, this is setting up as a little trend continuation trade here on the 15. You look at this as a little low and tight flag. But hey, what can happen here is we've seen a pullback, see a move lower, you then see a pullback, and then you see a rotation, which is a head and shoulders and a move higher. So certainly something to pay attention to, but you have an at market cipher with a very good reward to risk because we've rallied right past the entry on that trade. Let's go and take a look at the pound yen. 4 more to go on the pound yen. Looking at trend continuation, though we are retesting structure. So this is our structure lows just here. You can see price has not come into it. Look at this lovely rally that we've had here. We've seen a very small pullback, and when we look at trend continuation, we tend to see, when it's directional, very small pullbacks and long extensions. So as a minimum, even though there's no confirmation, I'm looking at the market coming to this level, and to be honest, I'm expecting quite a big continuation here, even though we do have this big wick. Let's drop to the 240. Here on the 240, I'm going to put a structure level on at our lows just here, and we are still holding that structure level. So right now, this is a decision point. Let me move that up a little bit. We could actually see a small counter trend move here, because this is a major level of structure. The RSI is oversold. Let's drop to the 60, sorry, see if there is anything. Well, nothing here on the 60. Let's drop to the 15. And what we want to do is just make sure that this structure level has held. So from the closes of the candles to the low of the wicks, that's where we're always going to be looking for rotation patterns. And you can see right now we do have a valid double bottom. Okay, this, even though this here has violated this lower structure level, because of this wick just here, it's technically not a violation. So this is technically an at market double bottom. We have the RSI confirmation. We went oversold with divergence. The problem for me is, where could targets be? I just don't know. I don't know. Actually, is this an AB equals CD pattern? If it is, we have somewhere to place targets. Well, there you go, guys. Look at that. We have an AB equals CD pattern coming into structure. We have a valid double bottom. We have, do we have any fib confluence? There's no fib confluence, but now we have a place for targets. AB equals CD patterns are fib based, so what that means is we use fib targets. Now, because we are so bearish here on the daily, I would only be playing for one target, and that would be the 38.2. So if you got involved now, standard ATR for the stop, which is currently 5, well, you're going to want more than that. You're going to want at least 10. And looking for a retest of that 38.2, giving you a lovely reward to risk. If you want to wait for a bit more confirmation, wait for the market to go higher, wait for a violation giving you a confirmed double bottom, wait for that 26.18, so buy up the 61.8 and look at getting involved with the trade. When the market opens, I will not be getting involved in this due to the fees. But if this trade is still valid come Monday morning, I will be getting involved if we have this set up just here. Let's go and take a look at the pound dollar. We have an at market bat pattern. But first of all, let's take a look at the dailies. So here on the dailies, we've once again had a fairly directional move. We are down within structure, so we can be looking for maybe a counter trend or continuation move here. On the 240, this is what I like. Delete that. We've got a beautiful X leg here, and if we throw a fib on from our X to A leg, you can see we hit a 50%. So it is X to A to B, B to C, CD completion at the 886. The market has already gone oversold. You have an entry at market. If you want to wait for a conservative entry, I would highlight the wicks and I'll drop one time frame lower to the 60. In fact, is that right? 3 for the RSI. Wow, okay, the RSI is actually at 3.6. That is ridiculously low. To be honest, I would buy this up at market if it wasn't Sunday evening and the market was just opening. However, if you do get a gap, guys, you know, we see a gap down to this level and we do not violate structure, this will give you a great opportunity to get involved. I mean, how often do you see the RSI down at 3 on the 60-minute time frame? It's not very often coming into a structure level with an advanced pattern after a very directional move. So high probability trade there. It would be great if we did get that gap down. It really gives us a great reward to risk. Let's go and take a look at the last couple of pairs. New Zealand dollar, potential double bottom. Okay, New Zealand dollar. Very directional move here down to our structure level. So I'm just going to go ahead here and highlight the wicks, and you can see that we are within the wicks. This is where we want to look for those rotation patterns. Let's go and drop down to the 240. Okay, we have two levels of structure here, this level and this level. Typically when we have two levels close together like this, the lower one is tested, and as you can see we are testing that level. So I'm just going to highlight the wicks down here, and we've just come into that area now and tapped it. We are oversold on the RSI as well. We've got a very directional move, and these are the types of setups where we see double bottoms and head and shoulders. Let's just take a quick look at the 60. Oversold on the 60 at 12. Not a great deal else there. Also on the 15. 15 setting up as a little trend continuation trade here, maybe might see a bit of a movement down to the bearish side. Quite a few decent opportunities because we're at decent levels of structures here. The last one is the dollar CAD. We've seen some real bearish movement after we had our lovely winning our winning breakout pattern, trend continuation pattern, double bottom pattern that we had last week. We've now seen the market from our high point here where we took targets. We've seen a massive bearish sell-off, and we've come down to this level right here, and just look at all this structure we've violated. We have violated a lot, and we can predict the market to come down to this level as a minimum. However, we have this other structure level quite close here, so I actually would predict price to come down to this lower level. So what's going on right now though? Let's go and take a look at the 240. So here on the 240 we have this lovely directional move. You can see that we had a harmonic move there. Wasn't anything I got involved with, but from that point we've seen a move lower, a pullback, a move lower, and now we're seeing a pullback. Where are we seeing that pullback to? This is the outside return. So trend continuation opportunities. We had a first chance entry. There was no opportunity there. We're now within the second chance entry, and if we don't get an entry there, we'll look within the last chance just here. If you don't know what I'm talking about, go through the educational material. We cover all of this. But right now we have the RSI that's gone overbought at 87, nearly 88. If we get a lower low, lower close candle here, I'm going to sell the market. And if we get an entry something like here, stops going 80 hour above the high, that's 25. It's going to make me around 57 if I work my math out correctly. And I'm going to be playing for a retest of the lows for target ones only. And guess where target twos are? They're going to be all the way down at this level or even this lower level. This is a lovely looking setup here on the 240. If we drop to the 60, is there any additional confluence that we have here? Oversold on the 60. Could make the case for an AB equals CD pattern here. It's ugly if I'm honest. Yeah, I wouldn't. It's ugly. Nothing else here. Let's just go back to the 240, see if we've got any fib confluence here. A fib from our swing high to our swing low. Well, we've come into a 50%. We do have a 618 up there. If we spike up and maybe put in a rotation pattern and still hold structure, that would be a nice opportunity. There's nothing else here. Let's take a look from this level. Well, actually, from the lowest point here to our highest point there, no, not a great deal of fib confluence. So just a pure structure based trade here, looking for a lower close. We've got the RSI confirmation, a great risk to reward there. You've got something like just to target ones, you're looking at around about 140 pips of reward, so a very nice opportunity if that comes off. Okay guys, that's it. Be safe trading. I will see you in the chat forum.